Hey, what's up, good people? How you doing? Welcome back to Stock Up with Larry Jones. If you are new to the page, go ahead, hit the like, subscribe, and the notification bell. It helps to keep me alive. Thank you for those of you that's been rolling with me for a while. Hey, it was a crazy morning. Also, please don't fall for any spam. I will never talk about a WhatsApp, a broker, or this person is making me all of this money. It's spam. Never send money or crypto to anyone. It's spam. Even if they say they're Larry, how's your trading going? It's not me. It's spam. All right, good people, listen. Anything I say is not a suggestion for you to buy, hold, or sell a stock or crypto. We're just going to discuss what's going on. So just like we discussed that the CPI numbers were coming out, which they did, and they were actually a little hot. They came in a little hot. But something really odd happened today. The futures were actually high, so it didn't look like it was going to affect the market at all. So before the opening bell, the Dow was up over 100 points, over 100 points. It was like 130 when I looked at it. And then it just came down. It took a while for it to settle in. So that's a sign that the market is actually pricing, it's actually pricing a lot in. We do know that Monday was a overreach. It was a knee-jerk reaction. And so listen to how the CPI numbers actually came in. Let's take a look.
Big inflation breaking news of 2022, our December read on the Consumer Price Index, CPI. Headline number expected up 0.4, a little hotter up 0.5, but that's definitely much cooler than the high water mark, which has been up 0.9. That was the highest in 13 years in October. And if we look at ex-food and energy, that was up 0.6. And currently, 0.6 isn't the high water mark. We have come down a bit. The high water mark was up 0.9. That was in April and June. Those were 40-year highs, so we have come down a bit. Now, here's the big numbers. Year over year, headline is up 7%. 7%. That is the highest since 1982, June to be specific, when it was up 7.1.
It came in hot, right? And the market, oddly enough, was like, we knew it was coming. So the market is starting to price stuff in. That's part of it. The other part is Monday was an overreaction, all right? So a lot of people think that we are in the clear, and I don't. I'm just going to keep it real. Now, to me, is even a better sign to not go all in, but to actually start to dollar cost average in. Where there's some good 1 day, 2 day swings, yes. And like I pre-stated, if you're a good stock picker, you could go in, swoop in, get some stock, come back out. You look like a champion, right? Buying and selling. But I don't think we've seen the bottom. Most analysts don't. So here's why I don't think we've seen the bottom. When the Fed came out and their reading of the minutes came out, talking about tapering, right? And cleaning up their balance sheet, reducing their balance sheet, so they're not only reducing the actual buyback of bonds, but actually selling. That's negative for the market, okay? Then they talked about the rate hikes, meaning 3 this year. And if it's really bad, they can go to 4. And then they talk about more rate hikes next year and the year after. So just the mention of that, it spooked the market, right? And so the market overreacted. We know that. But my question is, what's going to happen when the first rate hike actually comes, right? When it actually gets here. So now it looks like maybe March. Remember, this changes according to what the Fed says. So now, to what Larry sees, the biggest threat to the market right now is not Omicron. It's not anything else other than inflation and the Feds. That's what it is. Inflation, the Feds, and rate hikes. When I say rate hikes, I mean the Fed, because the Fed is going to hike up the rates. And so that is the biggest threat to the market. Last year, we had stimulus coming. We had the infrastructure bill, and the Build Back Better bill got killed, but it's not dead. It just got floored, right? But it's not dead. So we don't have more money being pumped into the market. There's no big stimulus package that's coming. There's not this big pump into the market to prop it up, all right, other than GDP. And so GDP is not going to be enough to keep up with inflation. It's just not. It's not going to be enough. Though it's supposed to be better, it's not going to be enough. So I don't think we've seen the bottom. And I'm not saying this to be fearful. I'm just saying be careful of the stock that you pick. There are good stocks to pick. And yesterday I gave you a whole lineage of the easy things. The money makers right now is financials, banks, energy, oil, some restaurants, low-end restaurants like McDonald's, biotech, healthcare. Those are the ones that are making money right now. This weekend, banks will be reporting. All right, so just be aware of that. Banks will be reporting this weekend. Oddly enough, in a time where we have disruptive technology coming out, and we're going to make trillions of dollars with disruptive technology, right? Metaverse, 14 to 30 trillion dollars in 10 years. EVs, trillions of dollars. Fintech. All of this stuff, actually, the the areas that are really making money right now are the legacy areas. For instance, energy. Instead of EVs, the charging stations themselves, what's been making money in energy is oil, legacy, right? Banks. It's not the fintech that's been making the big money, but actually traditional major banks. And then with the automobiles, really the ones that's been making money, Ford, the legacy companies. And so this is what's crazy about it. It's the legacy plays that are the ones that are making the money in this atmosphere, right? For this time in this period. Though I believe it'll be short-lived, right? So now we needed to have already rotated into these sectors to where we are making money, and we are, all right? Well, one thing, Lucid, I believe, let me check. It's either the 13th or not the 13th. I think it's the 19th. So Lucid is having another lockout, the end of another lockout, meaning the institutions that were able, and there were people that were able to buy Lucid Motors before it was a merger, all right? Before the merger happened, when it was CCIV, what happens is they are able to buy the stock at a discounted price, right? And so for a period of time, they can't sell their shares. That's called the lockout, right? And so that lockout period will end, I believe it's the 19th, well, next week, right? When that lockout period ends, Lucid will probably most likely fall. So if you're thinking about buying some Lucid Motors, I would wait until after that lockout period. Check it out. I believe it's the 19th. So be careful of that, because when the lockout period happens, Lucid Motors will fall, right? And what's crazy about it is this report came out last week. I saw it. I first saw it Friday. Everybody's been talking about it. It's been all over the place. You had to be on the rock not to have heard it. But just in case, I just want to remind you guys that it is coming. All right. And so Lucid could really fall. I wouldn't be buying it. Oddly enough, it's still running up. Okay, so I would not be chasing that. Just get it at a better price then. All right, good people. So I just wanted to come in, keep it there. CPI numbers did come in a little hot, but actually, all things considered, the markets handled it pretty good. Are we at the bottom? Do I think? No. I think there's still time. I think we're still going to have some volatility. All right, and so be careful of really spending all of your money on dips. unless you are a good stock picker, all right? And be honest, most of us mess up in that area. Now, I can do some things, get in, get out, but if you're new, don't try it because you're going to lose money. So the best thing for you to do if you are new is to start $2 cost average in. I'm going to start showing the portfolio probably this Friday in 2 days of my Larry Jones $5 a day challenge. And we're just going to start. Okay. Now, what you can do is continue to just put your $5 a day into your broker account, and you don't have to go all in, right? Here's what I think, and I'm going to wrap it up right here. I think that when the first rate hike actually comes, which it looks like it may be March, we don't know. We're going to wait and see what the Fed says. I believe that we're going to see new lows at that point. All right. Even though the market is starting to price it in, I just believe the initial shock and awe of it actually happens. That's what's going to kind of take it down. But I also believe that that'll be the time to start trimming or doing some profit taking on your banks. All right. They're only going to make money so long. I don't think if they have 3 rate hikes that the banks are going to make money through the whole deal. I just believe that the market is going to start pricing some in. So let's see how much the banks run up. And then if they run up a lot, just like any other stock, I would start to do some profit taking. All right. So we can rotate out, cash up, get ready to buy the growth stock that are oversold, which some of them already looks like they're oversold. But me personally, I'm dollar cost averaging in. If you bought some, let me know. All right. So let me know what you guys are buying. I see some of you guys bought the IDN, that IntelliCheck that I brought up yesterday because it started running up right after I talked about it. All right. Hey, good people, make sure you check out all the links below. Hey, check out the Webull link. Deposit $1, get up to $3,300 in free stock. Check out Coinbase for all of your crypto trading, and then check out Tip Ranks so you'll know what the top analysts are thinking. All right, good people, we're going to leave it right there because I always go long. I'm going to try to go short on this one. Live, love, laugh, and learn. We'll see you tomorrow.